welcome. We are here to talk about something critical but rarely unpacked in detail, and it is what happens to quantum startup beyond Series B. We hear a lot about science, but what about scaling? What about industrialization? What about market traction? How do you raise 50, 100 million in space that is still forming? That's the conversation that we will have today. And thank you to my 4 people who are actively shaping that transition in Europe and globally. I think Manjari will come in a few minutes. So welcome, Emilie Meet. You are principal at Quantonation. Ton van Noordende, I hope I spelled correctly your name. Sorry. You are general partner at QDNL Participation, and Adrien Muller, principal deep tech at BPI France, Large Venture. Bonjour, Adrien. Please, let's dive in now. And my first question will be for you, Emilie. Have you seen a real shift in the maturity of startup and the deal flow for the last 18 months?
Hi, everyone, and yes, happy to kick off this discussion today. So for context, I've been investing in deep tech and quantum for about 5 years. I think the first deal I worked on was end of 2020, beginning of 2021. And this was kind of at the peak of very early stage quantum startup creation. A lot of researchers across Europe and globally were spinning out their technology into companies. And since then, and in particular the past 18 months, indeed, the ecosystem has changed a lot. So I think there's a really nice graph produced by Sifted, actually, that was published, I think, about 18 months ago, that shows that indeed there has been an increase in more mature rounds in quantum, which means that the ecosystem has been maturing broadly. But on the other side, we've also seen that there's actually been less startups created. About 18 months ago, there was a little bit of a dip that went along with the kind of broader market dip as well. So things have evolved, big wave of startup creation. A lot of these have matured, larger rounds happened. But then on the other side, I think because the ecosystem was a bit shakier for a little bit, some of the creation of startups slowed down a little bit. Now this is picking up again today. I think quantum, like many investments in topics in investment, can sometimes be subject to the ebbs and flows of investor interest. But broadly, quantum has proved itself being relatively resilient and continues to attract investment not only from specialized investors, but also more generalist investors who are able to come in and help the startups as they scale and become more comparable to other types of technology.
Ton, QDNL is running a second fund. I think you have raised 60 million of euro. You have a global reach. Your team are in Amsterdam, in London, in the US, in New York, I think.
LA, correct.
In LA. Good point. And what lesson can we apply to help scale quantum beyond Europe?
Well, I mean, if you look at the recent announcement from IonQ, doing a 6th acquisition, I think, what is it, 1/9 of its current market cap as a public listed company, taking over, not LightSync, but, I actually forgot the name of the company. Oxford Ionics, obviously, of course, which is actually a UK-based company, obviously. So if you look at the US market, the market dynamics there are quite different. Even my partner, Chet Rigetti, who was the founder of Rigetti Computing, he built the company back in 2012. At that point, there was no real stable ecosystem yet, no supply chain. He needed to raise $600 million, but he also managed to secure that amount. I think it has to do with a couple of things. One is having a big, bold, ambitious vision, and also understanding what these companies need in order to capitalize and to generate a return over time. And this is, I think, one of the key things that that we'll have to take into account for the upcoming period.
Let's talk about the biggest challenge that a quantum company meets beyond Series B. Is it capital needs, technical risk, or market readiness? Maybe Tom?
Well, I think if I'm really honest, so we see an incredible amount of companies actually. So there's a lot of deal flow coming across Europe, US, also in the APAC region. We're talking to most of these early stage companies. Again, we are pre-seed investors, so we invest typically up to 1.5 million euros in the first round. In order for us to get excited, we need to see an exit potential, and I think that means, and a lot of the companies that we're talking to today, they're incredible research groups, incredible founding teams, but I think it's really hard if you build a company that has an exit potential of potentially 80 million or 100 million or 200 million. To your point about the question around this topic, it's going to be really hard for these companies to secure funding. So these might be exceptional companies, small, medium enterprise companies, but they're not generating a return for a fund like ours. So I think that's actually where the challenge is, to be honest. So it's not necessarily the capital availability, but it's more or less the type of companies being founded, focusing on a specific part of the stack, and the exit potential that comes with that 10 or 12 years down the line. And I think that's what we should probably be focusing on a little bit more.
Emily, what signals tell you that a company is really ready to scale?
I think I also am looking at this from an early stage investor perspective. So Quantum Nation, we typically only lead our investments up to Series A. So normally when these signals appear, we're accompanying the startups to be invested in by later stage financiers. I think scaling is a little bit of a complex word, right? You can scale a company in a lot of different ways. I think one thing that we see in deep tech and in quantum is that often because of the very heavy R&D needs of the company, typically you can have sometimes teams that will scale considerably in the early stage, but only on like the technical side and the R&D side, because the reality is if you don't have a product yet, you maybe are not 100% ready to scale your commercial team yet. There are a few different approaches to this. Of course, you can start, instigating these relationships and conversations with industrial partners early on to get partnerships, proof of concepts, and build these relationships to then be ready to have, a paying recurring contract with them. But until that happens, that's a little bit difficult. So you can scale in a lot of different ways. For me, scaling at growth stage, I think you kind of do need to have a product that you can sell. And that will be kind of the main tipping point, I think, for growth stage investors to be able to see a path to recurring revenue and be able to compare these companies to different types of tech in their portfolio.
Adrien, one question for you. At BPI France, how do you approach quantum deals at Series B stage?
So maybe I'll just build upon what...
Maybe you can use mine.
So maybe I'll just build upon what Emily was just saying and take the question the other way around. On what Emily was saying, the key criteria for growth stage investors to get excited about quantum, Emily mentioned a few criteria, having a product. The problem is that in quantum, nowadays, the products are not finished. There's still a significant amount of R&D to be done. The market's not there either. So as Emily was saying, you can do, as a quantum computing company or any other, do a few proof of concepts, partnerships with corporates to try and tease out the interest that they could have going forward in the future when the tech is ready. But at this stage, we don't have much of either a market or a finalized and ready to sell product. So what we do at BPI Large Venture, which is the fund that I'm a part of, looking at growth stage, late stage investments. We invest in rounds of more than 20 million with 10 million tickets minimum, usually in co-lead. And we'll come back to that just after. What we do is, as Emily was saying, we try to compare, to try to find key points to compare those quantum computing investments to our other portfolio companies. And what founders need to get really into their mind is that for a typical generalist growth fund, the competitors of the quantum computing companies are digital companies that are between 50 and 100 people with 10 million revenue minimum, an established product that can be demultiplied. You just inject capital and you have a machine that knows how to transform that capital into revenues. In any deep tech or let alone quantum computing companies, that mechanism doesn't work. So what they do, the investors, I in particular, is to try and adapt that model to deep tech companies and quantum computing companies. What will be the typical question we'll be asking will be, do you know how much money you still need to spend until your product is finished, until you reach certain milestones in terms of maturity, and is that safe? Are you going to come back next year and tell us, I told you that I needed still 50 more million to finish my R&D, but actually I need still 100 or 150. So if we feel that, then we won't get excited. So we need to be certain that one of the two risks, market or technology, is under control. So that you know how much money you're going to need to spend until you're at industrialization level. And once, and ideally in Series C, so beyond Series B, you need to be able to provide a plan, a credible one, for the industrialization. My tech and my R&D is finished. I've done one first round of putting the whole system together, and in order to build it recurringly, 1, 2, 3, 4 quantum computers per month or per year, I have all the partnerships lined up, and I need 50 million or 100 million.
Let's talk about public funding, and you're representing BPI France. What is the right role of public capital in supporting startup?
So it's de-risking the opportunity is the main keyword for folks like our colleagues with commercial private funds. We usually come as strong backers, either as limited partners. So that's not the team that I'm in, but BPI France is one of the key LPs in France and in Europe. As an LP, BPI invests 1.2 billion per year in various funds, oriented with the priorities of the year. Deep tech over the last 4 years has been a key priority. And then as a direct investor, if there is a fund that can get motivated and lead a 100 million round with a 20 million check, for instance, or 15, then we'll be around the same level or slightly more if needed.
Let's talk about business model. It was a question for Manjari, but Ton, I think you will answer to it. Are viable business model emerging? I mean, IP licensing, cloud platform, full stack solutions.
Sorry, could you repeat that one? Sorry.
What is there a business model emerging now?
Yeah, this is yes. So the short answer is yes. The long answer is it's not that simple. So first of all, I think also right now in the panel we're focusing very much on the compute side of things, quantum compute, which in my opinion right now I'm more inclined to see opportunities actually in the US emerging, where there's one clear winner arising that is actually able to raise a lot of capital. This type of business model for these quantum computing companies is incredibly hard. You won't get away by saying, hey, we're going to scale up the platform 2x and then have a 1,000 or 2,000 and then put it on the cloud and have corporations or industry players adapt it. It's just not going to happen. I don't think that's a realistic thing. So there needs to be something else on the horizon. And I think, but that's on that side. So I think that's an incredible tough play to play right now, specifically in Europe. There's a couple of companies that are doing really well, but they're going to, I think, down the line struggle to raise the amount of capital needed, because we're talking about still about $1 to $5 billion in capital that you need to push into these companies in order to make a full stack, full tolerant quantum computing company work over time. Now, on the other hand, on the communication and sensing side, I think there's an incredible opportunity, specifically for Europe. We just saw WeLink on stage. We ourselves invested in a company called Qbert that's doing MDI, measurement device independent QKD. This company is generating revenue since the get-go. They've been tripling revenue every year. It's a large apparent market. If you're a critical infrastructure player, if you're in defense, you're going to need it. So I think for those type of companies, the timing is much more right, but the exit potential might be less. And then, of course, there's the sensing side, which is still, incredibly enough, the most underinvested space within our topic, where I think the near-term potential is here. And actually, there's quite a number of companies that we're looking at that are experimenting on doing certain measurements that are not only valid in healthcare and life science, but also actually in the classical semiconductor industry. And so on the business model question, so again, it's a little bit of a long answer to your question. I feel I'm very curious to meet founders that are, innovating on the architecture side to build something that might be able to generate or create a model that works, and I haven't unfortunately seen it yet.
Adrien, Emily, maybe you want to complete what Ton is saying about business model?
Business model in as a
Yes, the
fund?
business model that you see emerging now. No?
Right.
I mean,
Yeah, Emily?
I'm also inclined to say, yes, we are seeing viable business models, and you would really hope so, because all of us are spending a lot of people's monies into companies in deep tech and in quantum. So yes, there are viable business models appearing, of course, but I can only agree with Ton that it's complicated, and to see these companies grow and return venture scale returns to investors in the European ecosystem, a lot of elements need to continue to come together for this to work. And this means public funding, it means market readiness, it means, making a healthy business that is not overspending, it means getting the right team together. I mean, it's not a one-sided answer. And in that sense, I think Ton answered quite completely.
So maybe the business model for early stage funds, we just covered that. The way we look at it in terms of a late stage fund is that we want to help build standalone companies. Those companies that can generate 100 to 101 million revenue over time. And these are the consolidator of the market with the technology blocks that we just mentioned before. So the ones that we see with a business model are quantum computer. It doesn't mean that we're not interested in looking at building blocks, but really that's the job of early stage investors. And maybe what we'll, the fact that we're seeing the likes of IonQ starting to consolidate the market, bringing in key technology blocks for those companies that were had the ambition of becoming a standalone company, but couldn't build everything around their key technological differentiator. The fact that these are starting to be consolidated is good, because then we can build worldwide and European champions.
We are at the end of this session. Maybe each of you have a last word to share with us. Maybe Ton, you want to start?
Like anything specific?
As you want.
Everything that I want. Well, I mean, so for everyone in the audience, I mean, obviously these sessions are still, always, it's really tough to go into depth and in detail in a short time. So, but if you're right now looking into building a company specifically, or thinking about, spinning out, then, definitely make sure to reach out to us, because we're active in the market. And the other thing is, in the end, it is very much about the technology, but it's also about building the right team. And so, yeah, just make sure that when you start out, you start with the people that you think are also going to persevere and push through, because it's going to be it's a hard game to get towards a certain exit point, but it's worth it. Emily, your last word.
Thank you for listening. We're also quite active in the quantum market and always looking to invest in startups, just like Ton and Pépé with Adrien. So please do get in touch. At the moment, I'm doing a lot of thinking about exits in the ecosystem. So if you're a founder or you're someone in the ecosystem thinking about exits, feel free to get in touch. Would love to hear your opinion.
Adrien.
And maybe last word from me, because the panel is opportunities and risks beyond Series B. If I had one thing to say, it would be think finance. Think that the late-stage investors are almost a different species compared to early-stage investors, and they are happy to aim for lesser returns. Typically, on average, on their portfolio, 3x as opposed to 10x or more for the early stage investors. But in exchange, they need certainty on some of their of the risks map. So come up with a reasonable and credible financial plan on how much money you're going to spend over the next 2, 3, 4 years until profitability. So think profitability in a finite horizon and be ready to justify it.
Thanks, everyone. Thank you, everyone, for this session. I don't know if I am closing the. It's up to me. Okay, so now it's time to go to lunch, I think. And you're here.
Maybe we're going to let you all go to lunch.
Any questions from anybody?
Is there a question?
Do we have a question?
Nobody is raising money.
Yeah.
On my way.
Yeah.
Thank you. Maybe for Quantonation, I was wondering, because you were speaking about exits very briefly. I know that you have launched your second fund, and it's not also it's including other startups, not just quantum startups. How was this decision taken, and how are you dealing right now with the exits that you're doing? Thank you.
So to clarify, our first fund also had this second pillar of investment. So we invest across broadly, quantum technologies broadly, so compute, sensing, enabling technologies, software, security, everything. And then we have the second pillar, which is we call deep physics, which is kind of a made-up word. It's physics-enabled technology. And both quantum and this other branch, deep physics, are linked by innovations in physics. And so we already made investments in this space in the first fund, and this remains a pillar in the second fund. So it's not a new investment area. It's always been there. Quantum remains our first and foremost focus, and the second pillar allows us to explore across other investment areas like semiconductors, photonics, new compute architectures, any sort of simulation platform that might be based off of physics models. So it's a way of continuing to deploy in our area of expertise, which bubbles down to physics, and go beyond quantum a little bit. And in terms of exit, so we're still very early on in our deployment period. So we started investing formally via the structure that is Quantonation 1 in 2021 was the formed entity. So this is actually quite early in our fund life cycle still. So we've deployed, and now we're getting to a point where a lot of the companies are getting to a maturing point, starting to raise larger rounds, and the next couple of years will be very crucial as to how these exits come together. I think there was another question also.
Another question just there.
Yep. Thank you for the exciting session today. I'm from Japan. Government agency supporting startups going global. And my question is, from your perspective, what kind of field, what kind of areas or regions are exciting or potential field in quantum field, like in Paris or in France, in Europe, or any other places from US, Asia? What do you see about that?
Well, obviously, there's a lot of exciting, tech in Europe as well. And I think, the interesting thing about this space that we're active in, and by the way, we then, based on Emily's comment, actually, I realized we're then the world's only pure-play quantum investment fund then. Because we don't do deep physics, but really focus on the topic and try to go really deep. But I think what I'm seeing right now is that not only the technology, but also the company creation goes in waves. Right, so a couple of years ago, we saw France and Netherlands coming up with 10, 20, 30 companies being incorporated out of the spin-out process. Then now followed by the Danes, and also in Finland, where there's a lot of activity and a lot of excitement as well. Our fund also spends a lot of time in the US. Around, next week we're going to be in Boston. We're going to spend some time in Maryland. We just made the last investment in LA in a really exciting company that was spun out by an experienced deep tech CEO with top professors from Harvard and USC. And there's also quite some excitement actually on the APAC region. But I think that's more actually my partner Chris, who's more focused on that. So across the board, quite some excitement. I think for us as a global investment fund, the way you should see how we look at these businesses, because we are pre-seed investors. So in some certain cases, we even come in pre-incorporation. In fact, in the US, We're not even a pre-seed fund. You know, we come in the friends and family round, right? We want to secure equity before the uncapped safe notes come in, and so we want to stake in the game. So we put our $1.5 million check to work alongside some friends. That's kind of like a different story. In Europe, it's more, I would say, you know, there's some arbitrage there, and the companies are a little bit earlier. But back to your point about where are we most excited about in terms of regional, I think for us, what we see when we see a company being created, or a storyline or a narrative or a particular architecture or some kind of development that we think is exciting, we typically go around the world and also talk to the other research groups that might actually be in the same similar process. And then finally to that note about, is it actually in the end about technology? Well, if you look at the recent announcement and the recent news that IonQ will acquire Oxford Ionics, you can also maybe say that, well, you know, maybe IonQ is overvalued if they're buying a better company. So that's the other part of the story and the narrative that we as pre-seed investors need to be careful with and take care of, because it's not always that the best technology company wins. It also may be the best capitalized company. And this is a game that, of course, has been played in the US for many, many decades, and is something that that hopefully we can, you know, recreate and also help facilitate further along the ride.
Maybe just to complement, what's for sure is that in deep tech and in quantum in particular, the competition is global from day one, as opposed to the typical scale-ups in that we see in Europe, or that generalist late-stage funds invest in, which are French or European champions, which are then fueled in order to compete at a global stage, and then consolidate with others similar companies in similar markets. So they are regionally focused, the normal, typical growth stage companies. In deep tech and in quantum, it's scattered. There are maybe 5 groups around the world in a specific technology, so they all know each other, they all compete against one another. There are some in Australia, in the US, in the UK, in France or Europe, Japan, Singapore, and that's it. As a quantum computing company, as an example, you need to go global from day one, build those partnerships in those regions where there is a local quantum ecosystem with a national ambition, a national budget, and a local ecosystem that you can partner with. Once you've done that, then the consolidation will certainly happen. And the role of early stage investors is to go and forage and hunt down those early stage companies in all of these small ecosystem, and the role of a late stage investors is to try and support 1 or 2 champions that are then going to be consolidating their area of technology across those various ecosystems.
Thank you very much. Please give our panelists, Richard, thank you. Please give our panelists a huge round of applause.
Yeah, sorry for Manjari.
Oh, no, you're great.